Monday, September 9th, first positive day for the stock market in September. And you must be wondering, is this it? Is this the low for a while? I'm going to jump from the SPY to the Qs, which I did last week, and instead look at the Dow. Now, specifically, I'm going to set up a panel here of charts for YM futures. So that's the index futures for the Dow Jones Industrial Average, which a lot of our tribe trades. So if you're new here, I'm Hema Reddy. I use price action, candlesticks like this, momentum, my favorite indicator of the RSI power zones, and market timing, that's forecasting, to boost my trading and that of my students. So like I said, I wanted to bring something different into the mix, so I'm going to not focus on the DIA ETF. I'm going to go ahead and set up a panel here from scratch where I'm going to analyze the YM futures. Now first, here's a quick side note you need to be aware of when looking at index futures, right? They roll. Futures trade on contracts. In the case of index futures, they change every 3 months. So you got to look at the calendar for the exchange that puts those contracts out. So the YM futures is put out by the CME group, and this is their website. So you scroll down to the current year, in our case 2024. We look at the current front month, which is September or 9, and we're going to look out and see, okay, the current September contract expires on September 20th, but it rolls on 9/16, September 16th, which is a week from today. So keep that in mind, that the analysis I'm about to do here on YMU24, that's the trade station symbol, could be easily redone, transposed on YMZ24, and so on and so forth. Now you might be wondering, Hema, why don't you just use the continuation chart? Because I don't like that I have to go in and readjust everything, and the continuation chart links data in a way that GAN would not necessarily have. So because I'm looking at it that way, I am going to go ahead and do the analysis in the fashion that I want to do, which is using the specific contract. So YMU24. Here we go. So this is the monthly chart. So you can see there's not a whole lot, okay? Because each contract month doesn't trade forever. But that's fine. We're going to change that to a weekly time frame. We'll have a bit more data. Okay. So with this perspective, and that's all I need, okay? I'm not going to go back beyond October 2023. I'm just going to take what's here. Let's look at a few things. Now, one is the directional moves of this market. And I'm having a workshop this week on Tuesday, September 10th at 4:30 p.m. Eastern, where I'm going to dive deep into how to determine directional moves, the best way to measure them, and some twists on how I do this, all right? So be sure to attend the workshop if you are not familiar with my GAN trading patterns approach already. I'm going to go ahead and deploy here though, okay? I'm not going to wait a whole day to do this video. So I'm going to show you what I'm seeing. So first I see this doji candle low, and this is a dragonfly doji, meaning the open and close are up near the high. And you can see we got a lift off of that. Then last week we had our weakness, and now we have a one-day session that's already taken back a lot of the losses from last week. So that's what this little line here is going to represent, okay? So for the purposes of this analysis, I'm going to just keep moving through on the same chart. I'm also going to annotate the candle with support. So I use blue for resistance, pink for support. Let's look at the low, 38,541, 38,517, 37,880. So you can see this was a higher low, and therefore it was a directional move that we can measure. Okay, so if you see this faint orange line here, that's how I mark price directional moves. Because everyone else out there is talking about uptrends and downtrends as if they just, carry on. But they have a structure to them. And again, I'll dive into that in my workshop. All right, what I want to look at now is taking this to the daily time frame. So again, same chart, just changing the candlesticks from 1 week each to 1 day each. Now, because this is a futures contract, if you go way back to when this contract was not the front month, right, the main month, there will be these hash marks. Those are what are called limit days. That was very low volume trading, and there was not a lot of participation. Don't worry about that history, okay? Come to where you start seeing more full candles. So I would say, we started seeing more complete candles here in the beginning of April, and everything after that is meaty enough for you to come in and analyze. Okay, so we had this range of resistance on the weekly chart, which I've now made my point, so I'm going to remove it. We have a range of support from the weekly chart, which is very, very similar to this support from August 5th. So I'm actually going to rejig this, okay? I'm going to take it away from the weekly levels to the daily levels. And now I want to look at a couple things. So let's bring in some momentum and forecasting if applies. So looking at the RSI power zones, it takes the traditional relative strength index and then it ups the ante here by basically saying, look, bull markets and bear markets, they don't move the same way, all right? They move in different zones on a momentum indicator. So when you see here that we're down at the bull support power zone, these two lower green lines, and now we're lifting off, that's not a bad sign. The thing is, keep in mind that, well, there was this high 41672 back in mid-July. There was a high at 41674, okay? So it pierced this resistance, but the market was not able to push above, and that coincided with a bull bear RSI face-off. Yes, the bull bear RSI face-off is probably the best signal to start with when you're applying my momentum technique. So we already saw the negative impact of that, and now are seeing bulls trying to resume again. So remember that when you have a bull bear RSI face-off, it has an impact, it has a lifespan, it doesn't just last forever. So the negative aspects of that have already completed. They don't necessarily have much more room to the downside. We would need a new wave of downward momentum to suggest as such. Okay, so I'm really just being real transparent with you here and showing you everything that's in. I'm going to keep going here, but if you've been finding value from this video, please give it a like, subscribe to my channel if you haven't already, and drop a comment down below as we finish out the daily chart, and I'll go intraday as well. All right, so now I'm going to do a couple of forecasts. For those, I'm going to draw and calculate the forecast on my own in a minute, and then I'll be back. All right, so I took a minute to calculate some forecasts, and here's the thing. As early as May 31st, there was a forecast for price to trade up higher into this about 41.27.5 area, but an expectation was for that to happen by July 1st. As you can see, it took more time and happened July 18th. So the way I teach how to use forecasts, they can provide usefulness and price or time or both. And the key is knowing how to address the missed forecasts, the ones that are overshot or missed. And I teach all of that when I teach loss forecasting. So I'm just showing you some forecasts that were pulling price up and to the right, okay? So for this first little pink crosshairs, the forecast could have been calculated as early as May 31st. And for this second crosshairs, the forecast could have been calculated as early as August 9th. So that one's still out there. Notice though, we already sort of reached the price aspect of the forecast. That's the little horizontal dash line. The time is showing as September 20th. So this is telling me right now that September 20th is potentially an important date. But again, because the forecasts have been more useful in price than in time recently on the Dow futures, I'm not going to be so married to the date. I will, however, realize that this is a very important resistance level. Okay, now what do? Is we go down one more time frame. So I'm going to come down to a 60-minute chart in a moment. I just want to calculate a couple more things here. So I'm looking at some key resistance levels. And how I'm deciphering these and what tools I'm using are mostly from the 4 zones RSI coverage system. That's my favorite way to decipher support and resistance. I teach in one of the lessons in there. Last but not least, I'm a student of Gann, so I'm always going to look at what the 50% retracement is. And you can see right now that the 50% retracement is down below at 4112. So that's an important support area. All right, let me save my work. And then change this to a 60-minute time frame. I'm going to just change it right here. All right. So I'm squishing up the data so that I can kind of get perspective on what this looks like on a 60-minute chart versus the previous daily chart. So we had that run up, we had the correction lower, and now the market is attempting to renew higher. Right now, it has come in and offered up an important approach to resistance level here at 41.080. The other important resistance after that is 41.169 and 41.260. We've also seen a shift. Notice how after the topping out here in late August, the bear zones, the red zones, were dominating the RSI power zones on the 60-minute chart, but now there seems to be an attempt to return back to the bull resistance power zone, and the last time that was approached was back on August 26th. So there's still room for bulls to continue higher, but they do have to carry out their mission through 41.080. On the flip side, for support, we've got 45.76, and this is an entire range here, 44.15, 43.40, and 42.64. I would also look at the entire range, the high, the low, and the midpoint of this candlestick that formed the 10 a.m. bar here on Monday, September 9th, because it was an outside bar. It had a higher high and a lower low than the previous candle. So when you get in more granular and go down levels, you'll notice that what appears as an outside bar or an inside bar on one time frame, if you go to a lower time frame, turns out to perhaps be a directional move. And again, I'm doing a whole workshop live this week where I'll dig into this and more. We'll look at live charts with it and everything. I just want to give you a sense of what are the key levels and the key directional components to be monitoring here on the YMU24. I'm going to leave you with one last look at the directional components. All right, so here it is. 1, 2, 3 main moves currently, and I'll dig deeper into how I uncover those, what it is that comprises these moves and more when I teach this week. So look forward to seeing you at our session. Hopefully this was helpful to those of you who trade the Dow in its various forms, whether it's ETF or the futures, and keep an eye on these levels. If you trade those futures, I'm giving them right to you that you can monitor in the trading days ahead. So again, if you made it all the way to the end of this video, congratulations, awesome job. You got a full lesson here on so many of my techniques, and I would appreciate you subscribing to the channel if you haven't already, giving this video a like if you got some value out of it, and dropping a comment down below to let me know specifically what you gained and what more you'd like to see. Thanks, and catch you next time.